If the company went to zero today and just evaporated, would I still have thought it was worth it to do this?
So starting a large platform out of New York City is no easy task.
We just felt the need to do something about it.
We had just taken the same process that was running for hundreds of years, called
All right, guys, welcome back to Built in America. We have two awesome founders here. This is Kelly Littlepage and Steven Johnson. They're lifelong, really good friends and co-founders of OneChronos. Steven and Kelly, thanks for joining the pod.
Thanks so much for having us on.
Yeah, appreciate it.
Steven and Kelly, having two friends and being co-founders of starting a large platform out of New York City is no easy task. Tell us a little about OneChronos and also your relationship that you guys got started.
Yeah, so they're kind of related, as it turns out. I've known Steven since our middle school days, and we were just talking about this. It's really like Steve was very busy trying to game the system in middle school, and I was very busy actively fighting the system in middle school and on. So we kind of bonded over really the fact that when certain rules and constraints don't make sense, we just felt the need to do something about it. So whether that's, our little causes back then have turned into bigger causes now, basically, and rewiring capital markets is one of them.
Yeah, in the early days of middle school and high school, I was adamant about not doing homework. I would bend over backwards to avoid homework at all costs, and that was kind of the thing I saw wrong with the world then was homework. And I think we matured a little bit, and now it's we started tinkering with, and Kelly was working in the world of trading and specifically algo trading in equities markets and other markets, and kind of saw the evolution of electronification in stock trading and Forex and all that. And, we kind of bonded over working in very separate industries, but just very fascinated with this evolution of electronic trading and seeing how things were being done in a way that didn't really make any sense to us. It seemed like we had just taken the same process that was running for hundreds of years, called the limit order book at stock exchanges, and just put it all on computers. And there were a lot of side effects to that. And we kind of got to brainstorming on how we would apply the different skill sets we were developing in our careers to solving those problems.
Steven, Kelly, there's always a yin and yang to every partnership, right? If you redefine Kelly's zone of genius, what would that be? And then Kelly, what would you say the same thing for Steven is?
Oh, that's a very tricky one because Kelly is very multidisciplinary. So you could ask Kelly any question, you will have the entire Wikipedia answer, and then go much deeper into it in fields that you really don't expect. But I would say one is just on the technical creativity side. So being able to solve problems in ways that almost nobody else would think of.
Yeah, it's funny since I would say very similar things about Steven. One thing that he really spikes on is foreign languages, and really was having like encyclopedic knowledge of history and language and everything else. And as far as how that translates over to business, Steve's really good at remembering and getting all the details right, remembering people and interactions, and just in general, kind of working through situations that leave everyone feeling happy and good after the interaction. It's a real superpower of his.
The reason why I asked that, right, is a lot of people today who join partnerships and are sitting across the table with a potential investor potentially. They're always looking at how the partnership formed and how each skill set is growing in the business based off each partnership they have in front of them, right? And oftentimes people want to go build a business. They have to go form a really good team around them and then find where their deficits lie. And you guys started this company together, OneChronos. What other part of the business did you guys find deficits in that you guys were able to go fill to build this venture?
That would be our third co-founder, Richard Suth, in this. So Rich had a great career on the sell side. He was a partner of our Goldman Sachs before he left to join us on this. And I had a certain kind of Rolodex and set of connections for a very specific type of trading in the industry going into this. Rich is someone that has really rounded us out as a business in terms of he's seen a lot, he's done a lot, and he knows a lot of people versus, speaking for myself anyway, I was fairly heads down on the trading side. So getting someone that had those industry relationships and was comfortable being out there, spending time on it, while Steve and I could focus on building the product and the technical side of this was very helpful to the business.
then now the business has obviously transformed. They're quite mature now. If you were to define the company today in one sentence, tell us what it does and how you're making an impact to society.
Yeah, the one sentence right now is we're a US equities trading venue. So we're just like NYSE or NASDAQ. The difference is we don't list orders, we just match them. And we're something called an ATS. The impact to society that we're making is we help institutional traders better realize their investment goals. And that has a lot of trickle down effects to American households, 401ks, pension plans. So people vastly underestimate the extent to which even small amounts of market friction can create $1 trillion of inefficiency in the economy. And that's the problem that we're going after with OneChronos.
Yeah, a lot of it is about hammering out inefficiencies, and this type of auction that we run called a smart market, or specifically a combinatorial auction, is a lot of that is about getting rid of bidding inefficiencies and strategies that result in transactions that are mutually beneficial and could happen, but they don't happen because of market friction. And this is a thing that exists in every single marketplace. We chose to start with US equities for a bunch of reasons, but one of the reasons is that it's very mature as a marketplace that has a really clean regulatory framework. Participants in the industry are used to connecting to many different trading venues, trading destinations. So it was a great place to, it wasn't and still is a great place to prove out the model while still adding a ton of value to the way people trade today.
I mean, starting a company like this is, a massive uplift. I'm sure it takes capital to go build something out like this. You guys live on Wall Street. You're surrounded by the biggest financial district in the world. Walk us through how you guys got started, the capital raising process, how that all formed.
Yeah, so the very early days of the company, we were just focused on building. We figured that we would get to kind of an initial idea of what our go-to-market was before raising anything. And the first money in the door was Y Combinator, which was very helpful. So YC is great as a forcing function, both for really getting focused on the company, but raising thereafter. And we were very fortunate to partner with a fintech-focused VC firm called Green Visor to do our seed after YC.
And it's getting to YC is no easy task, right? You're pitching in front of the Sam Altmans of the world, and you have massive amount of competition in there. What do you think, they saw in you guys versus, the 1,000 applicants that goes through them probably per week?
Yeah, YC is very focused on the founding team as opposed to just the idea or progress or traction or anything like that. I think they saw hope in the two of us, and that we were coming from different disciplines, and that we had a lot of the boxes checked as far as what was needed to go after this very ambitious idea. We actually got rejected the first time we applied to Y Combinator, and one of the partners there, Jared, gave us some advice that we ended up taking, which was basically, you need to figure out a way to demonstrate progress on this very long and arduous mission. Building an ATS or a stock exchange is not something you can do in a couple months, get an MVP out there, get quick feedback. The customer base would not tolerate any level of failure, right? These are the world's largest financial institutions that are our direct customers. So first of all, there's not very many of them. You can't really afford to churn. So the product has to be right on day one, and it's also critical infrastructure, right? So you can't really afford mistakes. So it takes a long time to build the technology, takes a long time to get regulatory approval, and that's kind of foreign to a lot of Silicon Valley investors. So we had to figure out a way to make it more bite-sized problems that we could solve along the way. And so the second time we applied, we got in, and like Kelly said, YC was very helpful in getting the first seed round done. One thing that separates us from other trading venues is that we haven't taken any investment from market participants, and that's very intentional. And it's because we want to stay a neutral venue and not have any of the incentive issues or agency issues that might come from being a trading venue powered by some specific bank or some specific broker, et cetera. There's a lot of signaling risk, and that's kind of what we wanted to avoid, but it made it a more uphill battle to raise capital from investors that are just not as default familiar with this deep in the weeds capital markets infrastructure.
a business like yours is probably constant need of raising capital. There's always continuous rounds to go do so. As you always have to build up the team, you have to build up more of the infrastructure of the product itself. There's massive complex mathematical theories here. As you go through the journey of continuing raising capital, what are some of the best lessons that you tell listeners today when building a product at massive scale like you guys have to be mindful of?
Yeah. So one thing that we think a lot about is we're trying to engineer for a good outcome in the WhatsApp sense of a good outcome, where you have a very small number, very specific individuals building a product that results in a net big company that now touches the lives of billions of people globally. It's not that we're trying to get to a big company headcount wise. And that also plays into our philosophy on kind of, we've raised capital when we've needed to grow, but we are very focused on effectively bootstrapping going forward. So we will continue to invest in expansion, but kind of on a sustainable base. What I would say is, even when we're in this motion now, something that we're very focused on is long-term relationships, as measured by some of the folks that have joined the cap table more recently were people that we've known for 5 years or longer before. So I don't think there's ever a point at which that relationship building exercise can or should end, even though we're not focused now on raising now or in the foreseeable future.
I understand. Talking about scale, a business like this has, a limited amount of scale if you think about it, right? You're hitting a global TAM, and going from that 0 to 1 phase is a whole different skill set, and then 1 to 100 is a whole different skill set therefore after. How do you progress your level of scale by the team, the infrastructure, building the company, having the right tools in place, but assuring that you're not moving at a pace or a state velocity that can set you up for, a deconstructive mess?
Yeah, it's a really challenging question because there are so many dimensions on which we have to scale. Anything from the technology itself, at the core of our matching system is a, by definition, unsolvable computer science problem. Combinatorial auctions are the optimization we have to run is very computationally expensive, and we have to find fast ways to solve it. So our auctions run in 30 milliseconds, which is a tiny amount of time to run an optimization process. So that's one form of scaling that will always be with us, is just finding faster and faster approximations as we get more and more orders and more different types of financial instruments and non-financial instruments that we support trading in. The one that we probably think about more now is just scaling the company itself. We're about 45 people now globally, and that's up from when we launched 2.5 years ago, almost 3 years ago now. We were about 9. So we've definitely had to scale our corporate infrastructure to deal with the additional headcount and make sure that the culture, we're not redlining the culture of the company too hard. We're very, very cautious and careful about hiring, I would say. This is very much not a blitz scaling type of company. To Kelly's point about what's at scale before, we never need to be a company with 10,000 people in it. Even when we've taken over the world, so to speak, there's no need to have that kind of headcount. But at the same time, hiring too fast is, in my opinion, the easiest way to kill a company. So we're trying to be very careful, as careful as we can, while still meeting our growth targets.
Stephen, Kelly, I have a lot of founders that come on the pod who, have raised a bunch of VC, and then there's this seesaw that they're always playing with, which is, profitability and then growth and investing back into R&D, and understanding the difference between the two and knowing how to go and make sure you're satisfying investors and also what's best for the company. As you two building this company today in the early stages to where you are now, how do you manage that?
So it really starts with who you let into your cap table. And this is something that we've similarly been very dogmatic about from day one, is we are looking for investors that are building for the long term and for the massive outcome on this. So part of getting to the long term is being long-term greedy in terms of the way that you build a business like this is very much what Steve's describing, where it's this incremental, deliberate approach. And that historically, especially during the zero interest rate period, did not map well to the mental model of a lot of VC investment, which was, hey, if it's working, you can insert cash and make it work faster. Versus there are some very structural aspects of growing a market like this that the money doesn't really help with directly. So when we think about how you deploy capital effectively, it's really, hey, where can we start the process on something that's going to be a longer build and hit maybe 1 year, 2 years, or even 5 years down the road? And how much should we spend on that? And kind of a bet sizing framework, like really thinking as a trader, thinking as a poker player in a way about you're making decisions under uncertainty here. And the size of your bet needs to be commensurate with that. So that's kind of how we've approached this problem. But really, I would say to any entrepreneur in the space, it starts with your investors. You just have to be aligned with them on what their interests are.
Have you found you stay grounded when doing a venture at this scale? Like you're talking about, try to potentially get, a 70, 100x return to investors, these massive VC returns that everyone wants a moonshot for. While living in New York, they're moving at 1,000 miles an hour. And then sometimes you look up, you're like, wow, I just had 10 years just fly by me, and you haven't even blinked. And you have this realization moment that a lot of people in New York are just trying to go build the next biggest thing out there without taking a moment to really breathe. And I think there's a lot of entrepreneurship boosts that, how do you guys balance that, if you even do? And what do you think is the best pragmatic approach in doing so when building something that's massive?
Speaking for myself, I don't know if I am successful at stopping and taking a breather. It's something that I consciously have to work on, especially. So I have a 2-year-old kid, which leaves very little space for between that and OneChronos, right? It leaves very little space for taking a breather. I think one thing though is I think it's important to kind of look back from where you are today versus what was happening a year ago and appreciate how unrecognizable things can be. So it's very apparent for us now with just even things like our office space. We're running out of desks in our office space. So Kelly and I are sort of spending some of our time looking at new offices here in Soho. And those kind of moments make it a little easier to appreciate how much has changed over the past year or two.
The only thing I would add to that from my side is it's very easy to do if you're working on something that you really care about as a product. And I've forced myself at times to work on things that I realize are good businesses, good opportunities, whatever you want to call it, but not something that I kind of intellectually cared about. And it's different. I think that takes a lot more discipline. So the lazy thing that I've done anyway is just say I'm never really going to work a day because every day is working on something that is fun for me.
Yeah, let's dive into that a little bit. A lot of people tend to jump into endeavoring jobs because there's a monetary outcome on the back end of that without having a true passion behind it as well. I have this phrase where you should do interesting things with interesting people and not worry about the outcome, because if you just focus on those two control variables, something pretty miraculous will happen out of that, right? Obviously, he has a friend since middle school. You guys are intellectually stimulated by, building this company today. You have great investors on your cap table. It seems like you guys have a lot of things set for you in the right direction if you're looking at it from the sidelines. I'm sure there are probably times in your past where you were working on things that maybe you were just square pegging around bowling, those opportunities, and they looked good from afar because monetarily, they're probably the right thing to go do on Wall Street. And then what was that pivot for you guys to understand the difference between the wake up moment when you're like, hey, what I'm working on today sucks ass, and I want to go leave that and go work on something that I actually care about. And a lot of people have this dichotomy today when building something, and you're so deep into, career path, a business, and you wake up and you're like, this fucking sucks. Like, I don't want to do this anymore. And you start a new business with your best friend that is no full, and that you guys are stoned from the moon. I know that's a loaded, question, you guys, but I think what I'm trying to get here is we all go down a path sometimes or climb a hill, and then you go to the top of the hill and you realize it's not the hill that you want to climb. And the hardest part about that is walking down the fucking hill and climbing up a new hill, right? What was that moment for you guys?
Yeah, it was pretty different, I think, for us than a lot of companies where we very much did not sit down and say, we want to start a company. Let's come up with an idea and figure out what we want to do. It was very much the opposite of that. It was the slow boil over many years of us brainstorming and just talking about the technologies we were using at our respective jobs and sort of how those would apply to solving some of these capital markets problems. And it took years of sort of very gradual iteration on the idea until there was kind of a boiling point where there was a lot of luck involved career wise, where Kelly and I were both kind of looking at what we were going to do next in our own respective careers at the same time, as capital markets were like the concept of high frequency trading was becoming more widely known. And that was a big topic in the industry. And that sort of opened a door for us to, that and many other market timing things opened a door for us to actually start this company at a time when we were both luckily at a good stopping point in our prior careers. So part of it was, it was in the works for a long time. And part of it was just luck of timing.
Yeah, the timing front on my side was like, I've been really fortunate in that professionally, I've really liked everything that I've done. Everything's been its own fun, interesting challenge in its own way, but I don't really think that anything has come close to OneChronos in the sense that you're building something very deliberately when it's your own company. It's something that you start. And to Steve's point, it was a bit of a different journey for us, and that ideation really goes back to us seeing this problem, realizing it was a little bit, whatever you want to call it, prisoner's dilemma or tragedy of the commons situation, where there wasn't necessarily someone that was going to come along and fix it for us. And we're just kind of standing here being like, all right, well, I guess we're going to do this. The afterthought was, hey, how do you make this commercially successful and viable? And I shouldn't actually call it an afterthought. It was more like we were starting with such a big market that, to your earlier point, the exercise was basically, hey, if we build something that does what we think a new auction format can do in this market, then the money will come, as opposed to sitting there and trying to figure out exactly how we make that happen up front.
You guys ever look at what you're building today in the context of this lens? As this has really changed my perspective of how I'm building things today. Is I'm Sam Mahmood today at 33, and at that story, and I'm 75 years old. And I'm looking at myself at the age of 33 today and what I'm working on and all the daily actions that I'm producing for my future self. And knowing, am I making the proper actions today that I will be proud of over the next 40 to 50 years? If you were to fast forward yourself 50 years today, and let's say you guys were extinct off this earth, what do you think people would say about you and OneChronos?
Yeah, that's a tricky one. It's I guess a sort of slightly different flavor to the question is looking at it today instead of 50 years from now. And I think it's the same thought exercise for me, which is basically, if the company went to zero today and just evaporated, would I still have thought it was worth it to do this? And that's, I guess, actually going back to your point about stopping and taking a breather, that is one that I do subconsciously or consciously pretty regularly. And to me, the answer has always been yes. Like it was obviously worth it to just have gone through this experience and been along for the ride. Now, hopefully that doesn't happen. And hopefully in 50 years, we're still doing this, or we're still kind of watching OneChronos from the sidelines or something. But, I think that's my mental framework for it, is if I knew that it was going to disappear, I'd still be happy to have done it.
Yeah, I feel completely the same way. But the legacy that we're trying to leave for this is like being the company that builds the smart markets that operate the real economy. And I think that is a lifetime of work. That's a 50-year build. And I want that to be our legacy. And what people would say about us is that this is the company that actually did that.
Stevie, Kelly, when I'm ideating companies today or looking to go acquire a company, I look at a couple of things. I kind of have more of a sales and marketing hat in my head when I go about doing this. And one of the first questions I always ask is, like, what's the guarantee in every business? And the rationale for asking that is, you look at FedEx, we'll ship it to you overnight, guarantee. Or Domino's Pizza, we'll get it to you in 30 minutes or less. And there are certain guarantees that have created messaging around companies that have set them apart, right? If you were to put a guarantee on your company today, what would that look like?
That's a really interesting one. One of the guarantees that we do make is that these types of markets effectively can do no worse than the existing market structure. And I really mean that in the optimization sense of it, where the way that we optimize these outcomes is we lower bound by what something that looks like the existing market would produce as an outcome. And then the way that we match trades is no worse than that. So want to say that the guarantee that OneChronos will make in the future is that we're very value aligned with every economic participant in this system, where we only make money if they get good outcomes.
Yeah, and one I would add to that, and this might be too literal of an answer or too in the weeds, but it's a very important guarantee that we make, and it's a very mathematical guarantee, which is this feature or product that we call expressive bidding, which allows people to express trades across multiple instruments, so multiple stocks at the same time. So something like, I only want to buy A if I can also sell B at the same time in the same auction in some predefined ratio. Those are guarantees that we enforce mathematically, and it may sound obvious that those are guarantees that are made, maybe not, but it's very new to the world of trading. This is not really something that's been done before. Typically, those types of trades, if you're moving from a portfolio to another portfolio or trying to trade a basket of stocks, there's some risk that you're going to trade some of the basket at a price you like, but then the market moves on you and the rest of the basket, you're not going to like the price, and the trade may or maybe doesn't even make sense anymore to keep doing. So that's the way that things work today, is there's some risk involved in, it's called legging risk, in executing multiple trades and multiple stocks at the same time. And we completely remove that risk, at least for trades on our venue. And that's a very important guarantee that, that we make across all the many asset classes that we hope to embark on.
Let's talk about risk for a second, and let's bifurcate OneChronos out of this. As you have the real estate market has it's up and down right now. Interest rates are still really high. The stock market was down a lot last month. Now it's pushing back up. Crypto's been up and down as well. A lot of volatility, a lot of uncertainty today. And if I could ask your unsolicited advice today on where you think things are going, where would you de-risk your assets today? For your unsolicited advice, what viewpoint of the world would you give on America's economy? What
I focus on like controlling what you can control, and for us that means continuing to grow the business. There is the assets question of like, what is the safe harbor these days? And I think like might be a somewhat controversial opinion, but if there is an inflationary environment, the safe harbor is growth and continuing to invest in growth. It's really hard to say that anything else is going to be a specifically correct long bet. So control as you can control. In our case, that's the business, and other people's cases, very situation specific. But unfortunately, I'm not aware of any magic bullet asset to drop your money in and be risk free. And if someone finds it, please shoot me an email, since that would vastly simplify life.
You just disappoint all of us here.
So we're working hard on smart markets, but no magic bullets over here.
Steve, what do you think?
Yeah, I mean, I was going to say, even if I had the magic bullet, we're a regulated broker dealer and we're not allowed to give the advice anyway. Unfortunately, don't have the answer on, especially in these rough seas out there, on what direction things are going to head.
No, it's fair. And as we wrap up the podcast, I have a few philosophical questions I would like standards for building something really big. I think sometimes we lose sight of what the point of life is, while also building a really big company, and then making sure that we appreciate just the little things that are going on in life as well. And do you feel that building a company this massive will unfortunately make you sacrifice other important things in life that you wish you had spent more time on? And if you were to look back in 10 years, what would be those things?
Yeah, there's no question that there's not as much time for things like hobbies that are unrelated to your job when you are starting or running a company. But if the company is something that you would be doing as a hobby anyway, that's at least a nice to have. And that is exactly the case for me. And I think for Kelly as well. One thing that we are clinging to with our diamond hands at this company is just writing code every day. We grew up playing around with computers and, both studied computer science in one form or another. And I've always worked with computers, and that's one thing I will give up with my last breath is writing code every day. So managed to keep the passion going on that at least.
Yeah. Similar answer. The one thing I would add is kind of goes back to my earlier point about being long-term greedy, where I think the long-term greedy solution to building big companies like this is you are smart about your physical health. You take time to take care of yourself. You take time to take care of your family. You're there for the stuff that matters because you understand that doing that stuff well actually does maximize your output over an extended period of time. So certainly not like there aren't situations pretty directly have to sacrifice being in place A instead of place B. But overall, I'm very happy with the work-life balance that we've been able to maintain here as a company.
Yeah, I mean, the focus discipline you guys have put together, especially the last year, building something this. There's a quote from Palmer Luckey that he released not long ago. This CEO and founder of Angel, and this is a quote. And I want to read this out loud to you guys and then get your thoughts on this. It says, "At some point in business and life and romance, you have to commit to that. A lot of my peers in tech industry do not share this philosophy. They're always pursuing everything with optionality, keeping their options open. They ensure that they're going to jump from option to option. And if they don't commit to a path, they're going to fail at it. And I think today there's so much abundance of opportunities and distractions of what you're building, where there are shiny objects in your right. It's willing to deviate you from the path that you guys are building today. How do you prevent yourself from going from option to option and stay focused on that?"
You do have to be very dogmatic about picking what the company focuses and only doing stuff in that lane. And we do constantly find good business opportunities that we would call a side quest, basically. And we have to look at them and say, that's a great idea for someone else to do. That's someone else's money to make, because it doesn't actually fit within what we're doing. We are fortunate, though, that the mandate that we have, which is to build these smart markets that will proliferate into the real economy and eventually touch pretty much all aspects of the financial ecosystem, it's broad enough that I wouldn't say there's too many creative itches going unscratched right now.
Dude, any thoughts on that?
Yeah, one of the most important things we track as a company is how many active bets do we have at any given time? And are we spreading ourselves too thin, or are we not spreading ourselves enough across these different industries we could be going after and different marketplaces we could be building? It's challenging because some things like, European equities or derivatives in the US have a very long lead time to get regulatory approval. So we're constantly investing in some things that may come to fruition 6 months from now, and things that are going to take 2.5 years of, maybe it's just one or two people working on it over that 2.5 year period, but trying to schedule things out reasonably in a way that we're not launching 5 different products within 2 months of each other. It's quite a juggle, and it's not an easy one. But it's something that we're very methodical about and that we try to be as quantitative as possible about.
You guys brought a massive amount of knowledge and wealth for this podcast. I generally appreciate the time that you guys have put in here and, the platform that you guys are building. Where can people find more about OneChronos and more about Stephen Kelly?
Yeah, info at OneChronos.com. Definitely feel free to reach out. And we are hiring across a bunch of different roles. So careers at OneChronos.com if this sounds like a company you'd be interested in working at.
We got a lot of fun business problems, and we got a lot of fun deep tech problems. So whatever side of the spectrum you're on, come join us.
There you go. That's a plug.